Welcome to The State of Us.
Beyond mainstream cable news and party lines, with a millennial and a boomer, The State of Us pushes past the noise and uncovers all the issues that matter.
Here's your host, Justin T. Weller.
A massive group of people have organized where they collectively have a seat at the poker table, which was previously invite only. That was the Wall Street Bets founder, the group responsible for recently costing some hedge funds into the billions of dollars as a result of trading GameStop and AMC theaters, sending them soaring, counter to what most traditional investors had been anticipating and betting on. We're going to look at the cost of activist or single investors today joining together, what it means for the future. We're also going to discuss the case for and against investing in Bitcoin. It's racked Lance and I for years, the buy or don't buy of the cryptocurrency market, and when to tap Social Security. Even if you're not an older individual, this may be relevant for you because it might determine how you plan for retirement, something that we could all afford to be thinking about. So today is very important because it's all about money. And if we're being honest, at the end of the day, that affects what we have a lot in the way of opportunities to do in life. And so hopefully it's obvious why you care. Whether you're involved in any of these things directly, they inevitably have an effect on the economy in one way or another, and therefore they affect each of us. But of course, we couldn't begin a conversation on financials, Bitcoin, and the future of money without
TrueChat senior historian and an educator of more than 30 years. Here is your friendly redneck liberal, Lance Jackson.
Everybody ready to go to Vegas? Because we're talking about investing your money. And as you mentioned in the quote to start the show, sitting down at the poker table, you might as well go to Vegas because it's legalized gambling. But talking about money, what is money? Well, according to Webster's Collegiate Dictionary, money, M-O-N-E-Y, is a medium stamped by the government used as an exchange or measure of value. And if you put that along with, we're going to have two, double your money today. Currency, C-U-R-R-E-N-C-Y, means a continual passing from hand to hand as a medium of exchange.
Which is important because, like we did in a recent episode, right, Lance, understanding the difference between money and currency, traditionally thought as the same thing. There's a reason that all those institutions out there refer to it as cryptocurrency rather than crypto money.
Yeah, I tried to look up cryptocurrency in my Webster's New World Dictionary, hardbound second college edition, and it's not listed.
Really?
Crypto meant imaginary, which I found very interesting. Just the word crypto.
Now, see, if we refer to the New World Oxford Dictionary, money is a noun that is a current medium of exchange in the form of coins and banknotes collectively. What I mentioned to you before the show, Lance, part of what's fascinating about what's transpired here, right, is traditionally we all kind of think about, or I mean, we've all been taught, right, that the stock market, generally speaking, is, determined whether it's going up or down by these fancy smancy investors and their analyses of, what is doing well for companies and what isn't doing well for companies. And it all sounds relatively scientific, except for we know when, panics ensue and investors sell off and then we all get screwed somehow for some reason that none of us really quite understand, other than that people are irrational. Well, this is kind of a flip on that and says, it's about companies that we are passionate in, or it's about sticking it to the man. And I think the point is what it goes to show is what you mentioned before. Are you ready to go to Vegas? Because really, at the end of the day, the stock market is determined by supply and demand. If people are buying something, the prices go up. And at its fundamental level, that's what we've witnessed as a result of this. And for those that don't know, Lance, right, it's basically this online community, online group in Reddit, which is a chat-based or form-based, I guess would be more accurate, a form-based community where people can share ideas. And the gentleman that started this did so because he had some extra money that he looked at as play money, and he wanted to invest in stocks. And he got frustrated because all the traditional online forums he went to basically told him, don't waste your time. Don't bet on stocks. You shouldn't do that. Same thing that most financial advisors would tell their clients, right? Don't waste your time on that.
Correct.
And he kind of got fed up with that. So he started this, and he even admits he looked at it as gambling, right? I mean, he really wasn't looking at it like it would become what it is. And yet, here's something that has demonstrated the power to literally cost billions of dollars of money to traditional investment organizations.
The other part that opens this up, when many of these companies offered no trade commissions on sales, it gave everybody a seat at the table. So instead of having to have $100,000 buy-in to play in the poker tournament in Vegas, you need somebody to come up with $100,000 to let you sit at the table. Now all of a sudden, you got $5, you can play because you can sit at the table with the billionaires. And it's hard to talk about this when we also then on the other side are talking about a $1.9 trillion bailout to help people because of the pandemic. To put it all in perspective, we're talking about the playgrounds of the wealthy here. And I guess to some people, to many of us, there's some satisfaction. Oh, you rich people are losing money now? Yeah, now you know how it feels. But the whole point is, as you read the article, you have to understand when you play with this stuff, you can lose everything. It's like winning big at the craps table and you look at the guy and you say, let it ride. And then all of a sudden, somebody throws craps and now there was more money than you'd ever seen in your life. And bam, one roll of the dice, it's all gone. And therein lies the rub. And therein lies the trouble with doing it. It's not that I'm not saying if you want to do this, that's fine. My whole thing is we're not hearing enough about, okay, here's all the plus sides. Here's all the good things. What are the minuses? But we're not hearing about, okay, what happens if you buy it at 400 and it sells at 50 cents is what you can sell it at. And you just lost everything. Not only did you lose the money that you made, you lost your initial investment. And if that was your child's college money or your rent money or your food money for next month or your car payment, now what?
Well, I think one of the consequences too, Lance, that can be easily overlooked, but the article kind of talks about at the end, right, is at its best, it's about the playground is for everybody. At its worst, it can descend into mob mentality. And none of us should need the reminder of what mob mentality can create just less than about a month ago at the United States Capitol. Now, just to be clear, I am not suggesting that these people, would do the same thing, but I am saying we know that basically anybody is capable of pretty much anything when taken over by mob mentality. And it's easy to get the rah-rah spirit going, but it's also resulted now in some members of these online trading communities threatening and intimidating, the children of these Wall Street investors. And that's one of those where, again, the guy that founded the group said, that's where it goes too far. We're way over the line. That's not what this is about. There's no reason that a child should ever be brought into it in the first place. But you also shouldn't resort to, harassing these other people. Yes, there is a line. There ought to be a line. And we have to be very cautious of that when things like this happen. I am thrilled, Lance, that people are using this as an opportunity to realize, no, the stock market, it doesn't have to be the way it's always been if we don't want it to, because individual people have greater access than they've ever had. And that is great. At the same time, have to be sensitive to, you can't let it descend into totally unresponsible behavior where you are, suggesting that other people deserve to be harmed. that's not okay either.
I was talking to somebody I respect just this morning, and we were talking about another topic, but they said something that I think fits here. We have a top group, and people in the middle strive to get to the top, and the people below the middle strive to get to the middle. But what we have now in our society, and this was their point, is we don't have that middle group anymore. And so you're either at the top or you're not. And if you're not at the top, the only way you see to get to the top is to take it from the top, is to take it from those people. And there's your violence. There's your threats. Okay. If you're in the middle, you think, well, if I just work harder and I do follow this model, I too can be successful. And what we've seen in the United States in the disparity of income and the disparity of the way people live and the way people get treated, we've just seen a diminishing, in their opinion, of that middle group. It's just like the Occupy Wall Street movement a few years ago. It's when the people are going to rise up because they don't see a way that they can play the game, that they can't, the rules are such that it's not a fair game. So instead of striving to work within the system to get ahead, they try to bring down the system. And that's just kind of my take on what you're calling the mob mentality. And I think that's a valid point for people to consider and for us to think about as we move forward.
Like many issues that Lance and I talk about, it's not all one or the other. It is a true balance, and also, thinking about what the merits, right, of it, and also the drawbacks and the things that we have to be cautious and aware of. And that's what we're trying to do. And that's what we have to do when we talk about the case for and against investing in Bitcoin and other cryptocurrencies. We're going to talk about Bitcoin because it's kind of it's the flagship, so to speak, of your cryptocurrencies, but it applies sort of across the board. So should you be investing in Bitcoin? Keep it here on The State of Us, and we'll be right back.
We are The State of Us. Here's your host, Justin T. Weller.
The case for and against investing in Bitcoin. We've got the article linked at thestateofus.org. That's our website, thestateofus.org. We link the articles that Lance and I use to talk about the topics today, because we want you to have access to the same information that we do, and we want to know what you think, and we make it pretty easy to do that. You can just send us an email, podcast@thestateofus.org, podcast@thestateofus.org. We very much want to hear from you. And as Lance pointed out in the first segment, with Bitcoin trading at more than 40,000 a piece near the start of the year, end of last year, start of this year, and quintupling in value over just the past year, the question arises for investors, those of us listening to this show, those of you thinking about being investors, should you get into Bitcoin or stay out of Bitcoin? And if you're in it, should you stay in it or get out of it, right? And there's lots of reasons for caution, because part of this is understanding that Bitcoin is a currency. It is a decentralized currency, right? So it, Lance, moves with the ebb and flow of the supply and demand for its existence, right? I mean, at its fundamental level, that's what it does. And that's kind of what we think of when we think of like a dollar bill, but that's really not how a dollar bill works, at least not anymore.
No, I mean, it's for those of you who know a little bit about history, think of the 1848, 1849 California gold rush. That's what we're seeing with Bitcoin right now. It's just like, oh, but gold. Okay. But again, people go crazy, and it drives things. It drives prices. It just drives prices through the roof. And that's what's going on here. One thing I found really interesting in the article, it said that just this last November of 2020, digital payment processors like Bitcoin merchants collected $270 million worldwide of Bitcoin. So people use Bitcoin to pay for $270 million worth of merchandise. By comparison, U.S. retail sales in November were $547 billion.
In 1 month.
So
right.
In 1 month, right.
Versus
270 million to $550 billion in 1 month. So we're talking about, you can have some Bitcoin, but where are you going to spend it? Now, the article does say that PayPal's talking about starting to accept Bitcoin and everything else, but that's where you're coming from, that, this isn't necessarily a currency that, call it a cryptocurrency. It's where can you spend it? What can you buy with it? So right now you're just investing that people will start to accept it. And what's driving up the price isn't because we'll buy so much stuff. It's that people are just betting that it's going to raise in value because more and more people are going to want it.
And when you look at it's kind of interesting that you brought up gold, because the article shares a handy chart, Lance, right? That it's actually more specifically a graph. For those you longtime listeners, you can appreciate the difference. But
the humor there.
It's not right. It's not incorrect to call it a chart. It'd just be more accurate to call it a graph. So the point is, though, the graph shows you, Lance, kind of ironically, right? The people use gold as a security sort of during recessions, right? As something to hedge their bets that's going to go up in demand. But to your point, part of what makes Bitcoin frustrating is when you look at the chart from 12/31 of 2019 through 1/8 of 2021, you would clearly have been much better off buying Bitcoin than you would have been buying gold. And for what it's worth,
I gold's gone up about 10% in the last, year, and Bitcoin has gone up almost 465%. Right. So if you were hedging your bets to cover your losses if the economy went down, making 8 to 12% or making 450%. There's your difference.
We could fund a few things, but part of the problem is, right, to win big, you also need to invest big. Because it's great if you turn $1 into 400. I'm not going to pretend like that's not a big deal, but at the end of the day, it's $400, right? You're not going to live off that. You're not going to start a new business with $400 probably. You're not really going to drastically change your standing with $400. Now, if you had invested, $40,000 or $100,000 or, $500,000 or something, now we're talking about taking, a decent pot of money there and really turning into something that is life changing. But that's part of the issue too with stuff like this, that I think, is it exciting if you invest $250 and 6 hours later you made $200? So you came away with $450 6 hours later? Sure. And that's why casinos make great money, Lance, right? Because the possibility of that thrill is exhilarating. The problem is most times it doesn't work out in your favor. And instead you come away with $0 at the end of 6 hours.
Right. You have those 4 quarters in your pocket and you stick them in the slot machine and you win 20. And you're like, oh, this is great. And you stand there for another 15 minutes. And after 15 minutes of hitting the buttons, you're now back to no money.
Right.
You lost all 4 quarters because most of us can't walk away. Oh, I bet a quarter in a slot machine. I just won $20. That's cool. Well, let's keep playing. This is fun. Odds are by the time you're done playing, most of us will have lost the $20 as well as the original dollar. Now multiply that times $100,000. Number one, how many of us have $100,000 of play money to invest?
Well, and that's where people then take their savings, right, or their safety net,
right,
and then they get hit.
Their emergency fund, and then all of a sudden something happens and they're in trouble. And that's the minuses,
And you don't hear about that because that's expected. Right. That's part of what we all fail, because you read these articles and, you hear about these people that it's like, oh my God, they became millionaires off of Bitcoin. Right. And yeah, that happens. It does happen. What you don't hear about is what's expected, which are the people that did not, right? That lost everything they put in or only made a couple percentage points, which again, that's not to discount because, I'll be honest, I own individual stocks. I have, a mutual fund. I have those sorts of investments and I'm excited when it goes up because, to Lance's point, that's human nature, right? We all want to see our decisions play off well. And I also don't want to sell Bitcoin short and pretend like it's just like playing the slot machines either, or just like going to Vegas. It is safer than those. It is still very risky, right? It's not as safe as, for example, investing in, something like the dollar. At the same time, it's not centrally controlled, which is part of why people like the prospect of it, because there's no government that's going to be able to manipulate your Bitcoin, so to speak.
To your point of taking chances, here's a comment from an investment strategist at Cerity Partners in Chicago. His company's looking into whether or not people should diversify a little bit and buy into Bitcoin. He said it's like working with venture capital. So he says in venture capital, 1 in 10 investments is a home run. 2 or 3 lose money and the others break even. The home run makes up for a lot of misses. So you're putting all your eggs in one basket. You got a 1 in 10 chance it's going to hit. So what real investors, what people who invest for a living typically do is they'll invest in 10 and they know they're going to lose in 2 or 3 of them. One's going to make them a lot of money and 6 or 7 are kind of, the remainder is like, win some, you lose some. I mean, that old adage. And so the problem is those people like us, we're like, oh, this is the new hottest thing. We go into it and we shove. That's why I said the Vegas reference. We go all in and then somebody throws craps and we're out. And we're like, oh, but to people who do this all the time, they expect that. They know that, okay, we're going to divide it and put it into different buckets or to different groupings here. And we're going to hit on one. We're going to win and lose, 6 or 7 and we'll lose a couple. But the one we hit is going to cover all of our other losses. And individual investors typically don't do that. They go all in on one thing and then it's hit or miss.
I think one of the good points, Lance, that's made in the article is it reads the following. There is no obvious way to determine Bitcoin's fair value. Bitcoin stands as a store of value only because some investors believe in it as one, right? Quote, Bitcoin depends on the faith of investors and nothing more. It could equally well go to 0 tomorrow if 10% of investors sold, end quote. And the point there is, again, not to say that it doesn't have value, because what is value in everything? It's what we decide the value is. In some cases, we have artificial and regulatory stops in place, right, to ensure a certain uniformity of value. But at the end of the day, folks, it's like when we talk about what's a dollar bill worth? It's worth what we say it's worth, right? Because really it's worth nothing. It's only worth the paper that it's printed on, which isn't much.
Well, when Grandpa gave me a dime to go to the candy store back when I was a little kid, I came out with 2 pockets full of candy. I mean, I shopped for an hour and filled my pockets up for a dime. Now, if I give a young child $1 to go into the local candy store, they'll come out with 2 or 3 pieces of candy. So what's that dollar worth? It's $1. I mean, that $1 is more. If my grandpa had given me $1, I'd have been in a sugar coma all summer, So how much is it? That's the point of how much is it actually worth? There's the dollar in, 1967 when I was going into the candy store versus giving a young person, a little child, $1 going to the candy store in 2021. How big a bag of candy are they going to walk out with? That's what your dollar is worth, because that's what society says you can get for that $1.
And I guess the point in all this, right, Lance, is it's your money at the end of the day. So Lance and I would never tell you don't do what you want to do with your money, right? But just keep in mind that the very thing that we call money only exists for the same reason that Bitcoin does, because we've all agreed that it has value. And the minute that we stop agreeing that it has value, it has no value.
It's a piece of paper with ink on it, right? That's all it is. And somebody says, hey, we'll take that. When you hold out your plastic
because I can go
card,
use it for other things that I want. But the minute that falls apart.
Right. Or when you hold up your phone, right? Yep. You hold your phone up and just say, here, scan that. The only thing that makes it valuable is, like you said, the person who's taking it from you says, I can turn around and get something that I want for it. That's what makes it valuable. Not that thing, but the fact that we all say, well, we can trade it for something else that we want.
Right. And that's the same point of, as if the world fell apart, right? Or if something happened, you would find all of a sudden that dollar bills don't have much value, because they would no longer be a practical means of exchange. And it would become more about, I need flour and Lance needs somebody to chop up this wood. So I'll chop up some of his wood because I got the tools and he'll give me that flour. And again, why do those things have value? Because they're things that we need that we can turn around and get something for, right? And it's the principle of it all. Yep. And if we understand that and you accept the risk of you're playing in a smaller version of that, right? Then okay, because you could win big, right? And it is your money. So you should decide what you want to do with it. But just part of what I think you and I don't want to see, Lance, is people going into it and thinking, it sounds really hot and people are buying this and it'll be great for me. And it might be, but one of the reasons that it's great for people is it's people who get lucky, and they're the ones that, bought in at the right time and sold at the right time. Or to Lance's point, they're people that can invest in 10 things. So 1 of 10 actually does make it and it makes it big, and those are the things that I don't think always get covered. And that's what hopefully we're able to help you keep in mind. But read these articles for yourselves, thestateofus.org. We've got them linked there. And we're going to talk about Social Security and when to tap it, because online calculators have unlocked the secrets of when you should take Social Security. Something that conventionally has been elusive to some people is now just a matter of mathematical equation based on what you want in life. So when should you take Social Security? How should you be planning for it if you're younger? These are all questions that we're going to look at and more. Keep it here on The State of Us, and we'll be right back.
We are The State of Us. Here's your host, Justin T. Weller.
We've had the opportunity to talk about a number of different things today, everything from activists and individual investors to the idea of Bitcoin and cryptocurrencies. Should you invest in them? Well, that's what we talked about last. Now we get to talk about, it's been the day of financials. Now we get to talk about retirement, right? And even though for some of us, such as myself, this may be a ways off, for others of you listening, you may be in retirement. You may be headed toward retirement pretty soon, but the reality is we can all benefit from this conversation about Social Security because generally we think, right, I'm eligible for Social Security, I should take Social Security. Well, unfortunately, the answer is not that simple. Yes, you can start taking it when you're eligible, but there's a number of factors, Lance, right, that go into determining when is the most effective? In other words, when are you going to get the most money over your remaining life from Social Security? And the reason that it's not just when you become eligible is there's a whole bunch of factors that go into play, like the age, if you have a spouse, the age of your spouse. Are they going to be eligible for Social Security? If so, when will they be eligible for it? How much will they be eligible for? And before you know it, it sounds like, oh my gosh, there's 50 things to take into account. When do you want to retire? How much money do you want to have? How much traveling do you want to do? And before you know it, it's like, well, how would I ever, balance all these things and really figure it out? Well, the good news is you don't have to, because online calculators have made it less a matter of guess and more a matter of reason through the ability to plug in these variables, right? And this article, Lance, that we have linked at thestateofus.org, it walks us through some of those scenarios where you might be surprised at what it advises.
Exactly. And, we don't want to forget if you're single or if you're widowed, all of those things are factors when you think about retirement, besides exactly, what you want to do, how much money do you owe, what do you think your expected bills are, all of those things. And so it's really nice. It's like everything else that we've talked about, being semi-retired, I guess, I don't know. There's that as I am, there's still so many factors that go into it. And part of it is the current theme we're talking of today as investment. Well, how much time do I have left and what do I want to do with it? So how much money do I need? And so it is a struggle when you start thinking about all of those things. And I thought I was well prepared. And even this year, as my wife and I both talk about pulling back even more. Well, what's that going to mean? What's our healthcare cost going to be? How much money are we going to bring in? So I think it's very important that now we have this calculator that people can go in. I guess there's more than one, right? There are multiple calculators out there, according to the article, for Social Security, where you can go in, and if that's going to be your main source of retirement income, like it is for most people, you can go in and plug your scenarios in, and it tells you, well, is it better to retire at 62? Or if your spouse is continuing to work, should you wait till you're 67 or 68? Or if you're married to someone who's much older or much younger than you, should you do this? What is the best, what's your current health situation? Should you start getting the money now, or you think, you're getting a clean bill of health and things look good? Well, maybe you would be better off to wait until the future. So it is nice to know, because being in this situation, the more data you can collect and the more information you can get, the more comfortable you are in making that final decision.
The other thing is, part of what can sometimes not be taken into account, for example, is, do people in your family tend to die younger or older than average life expectancy, or are they right about average? Because a lot of times when you're looking at this stuff, or when you're talking to financial advisors, right, they're going to assume the average. Well, that's great unless you don't meet the average. And then it changes how you make decisions. If most people in your family die 10 years before the average person, that's very relevant to what they're going to recommend you do. Likewise, if most people in your family live to be, 95, that's pretty relevant too. To what you should do when it comes to taking, and it's not just Social Security. They have calculators too for, like, for example, Lance was a teacher most of his life, an educator. So some people who don't necessarily have Social Security can find calculators for the Social Security equivalent, item.
Exactly.
And that's where you can plug in your spouse, how long you think you'll live, realistically. And then it's gonna, spit out for you, okay, here's what makes the most sense, based on your scenario. And the nice thing is you can customize them, Lance, so you can play with them, right? And it's going to show you what you stand to gain and lose. So you might say, it's recommending I wait to be 67 before I take this, but I can't wait quite that long. So what happens if I take it at 65, right? I mean, you can kind of adjust those little things and play with it and see what happened.
Well, that's the whole point, right? You can see, okay, well, I'm going to retire when I'm 62. Okay, this is what I'm going to get. And then you look at your bills and what you would like to do in your life and say, okay, I can live on that. Or, well, no, I can't. So I really don't want to, but if I'm going to work, I'll work till I'm 68. Okay, now what am I going to get? Oh, well, that looks pretty good, but I really don't know if I can work to 68. I might be able to make it to 65. So you plug in 65 and you're like, oh, okay, that's not a bad situation. And that's the really neat thing, is that you can do it for whatever time frame you want. Or if you can also do it the reverse. And that is, I need a certain amount of money. I've figured out my cost, to do with the things I want to do. It's going to cost me this much money. Okay. You just keep plugging the years of work into the calculator, and it will tell you, okay, at this point, this is when you're going to reach that amount of money that you need. So you can come at it from whatever way your brain works, either, to get the information that you need and be a little more comfortable. Because I will just say, and I know it's hard for you as this young millennial to imagine this, but I always thought, at least for me, at your age, retirement, this is great. And I have people coming, isn't it great? And I'm like, no, it's the scariest thing I've ever done, which is why I'm not retired. I mean, I retired from my main job 6 years ago, and I've continued to work every year since then, making some level of money. And now I'm making more money than I did when I first retired. Why? Because there's that uneasiness that when you say, I'm done, okay, then this is all I have to live off of. And it's costs that you don't think of.
Right.
Health insurance is the big one. For us to quit working, all of a sudden we're responsible for our own health care, which is why if you wait till that magical age of 62 or 65, whenever you qualify for Medicaid, that's a huge issue off your mind. So it's, as you said in your family, that for your dad, that was a big, he took a deep breath. It's like, okay, that's a cost I don't have to think about anymore. So there are costs that you try to think about your whole life that you don't until you get here.
Right. And that's exactly, Lance, to the point of, somebody my age. I think people in their 20s, right, should even be going and playing with this, because, you know, are you going to be married to the same person? Maybe you're not married at all. You know, who knows? But the point is, if you start looking at it now, right, you start to get an idea. Now is the time, and I talk about that all the time, right? Now is the time when you're young to be able to start making decisions right now that are going to put you in a better position when you get to that age, so that you can really think about, what do I want, you know? And you don't have to decide it all now, but at least you can be looking at it, and that way you're not surprised when you get there, you know? And
if you're in your 30s or 40s and you haven't started yet, and you're like kicking yourself, oh man, I should have started when I was in the 20s. You know, all these people, you know what? It's never too late to start. I think that's the main point I want to make.
Yeah. Whenever
you get started, you're going to be better off than if you wait to get started. So wherever you are in your life, with whether it's $5 or $100 a month or whatever you can do, whatever you start with, now's the right time. So don't worry, you know, don't beat yourself up if you've missed the age or whatever. Just do what you can right now and get started, and you're going to be better off.
Yep. You can't go back and change what hasn't happened, but you can do something about it right now. And that's why we link these articles, Lance, at thestateofus.org, so people have access to those resources. The calculators, some of the free ones that they recommend: Open Social Security, Social Security Solutions, and Maximize My Social Security. Those are all good options. But you can go to the article. You can read about others as well, or just search them on your own. But that's part of what we try to do here at The State of Us. The reason that we've had the conversation today is to make sure people feel like, you know, whenever you're starting is good, and to have the conversation, because again, that's the mistake that's often made, is not having the conversation or continuing to put it off. And you don't have to do those things. And with Bitcoin and the other stuff we talked about, those are all part of trying to have those. Let's look at both sides, because sometimes when the media is covering this, they're not sharing the full picture with you. So we try to do that, Lance, because that's part of our mission here at True Chat, right?
Right. I mean, currency and money were the themes today, and how it affects us and our happiness. And we're all different that way, but we just tried to follow the mission statement, which is to educate people by providing honest, open, and respectful conversations. And we've done that. We don't have all the answers, and we'd love to hear from you. If you have anything that you'd like to add, or you think we forgot, or that you found important, then, you know, share it with us at podcast@stateofus.org, podcast@stateofus.org. And also tell your friends about the show. If you've enjoyed it and you're talking to them, tell them they can find us on Spotify, Overcast, Stitcher, Apple Podcasts, and everywhere podcasts are found.
Like Lance said, we'd love to hear from you by sending us an email. It's just podcast@thestateofus.org, which is the same as our website. And that's where all these resources are at. Our show is both a podcast and a syndicated radio program. We release podcast episodes Tuesdays and Thursdays by 4 a.m. Eastern Time. And of course, you can hear us in select talk markets around the nation. So be sure to check your local talk station. And if they don't carry us, call them up and tell them they should. For The State of Us on True Chat in Urbana, Ohio, I'm Justin T. Weller.
I'm Lance Jackson.
Special thanks to our producer, Bradley Butch, and thank you all for tuning in. We'll see you next time. Be the change. Be sure to check out our website, thestateofus.org, for books, articles, and all the ways to tune in. thestateofus.org.